And good morning, Miss Stockton. How are you?
Good morning. I'm doing well. Happy Monday.
Happy Monday. And guess what?
Mhm.
You get me today because in Dale's area, apparently they're dealing with power outages. So
Oh
he
no.
he is, that's one of the benefits of living in California is
I guess
get to
so.
deal with that from time to time. But great to well, Happy New Year. And it's been
Thank
forever
you.
since I've actually talked to you.
I know, too
And
long.
it's been way too long. So, we were just having this conversation about the equity markets are just, I mean, it just seems like we're a bullish consolidation. Doesn't seem like, the market cares a whole lot about what's happening with the tariffs. Obviously, I want to get your views, just on how you're seeing the market because, and we can go into this and with your charts, but you're seeing the Mag 7, starting to weaken a little bit, certain pockets of weakness, but it seems like the market just, is rotating and finding
Mhm.
strength elsewhere. And a lot of old school people, myself included, we believe that you start taking out the generals, that's it's only a matter of time before the market suffers, but it doesn't seem like that's the case as of yet. So how are you seeing the market overall, Katie? And I'll stop sharing and let you share some of your
Sure,
charts
sure.
here.
Yeah, I mean, I don't disagree really on any of those points. I think that we've seen some real underlying rotation for sure, and that's helped keep a floor under the market in a way. But there's been some real deterioration in the indicators to suggest that we still are at risk of a deeper corrective phase. So that's in part what we've been focused on. We believe that the secular sort of bull trend is still very much intact, and yet we think that this is going to be more of like a consolidation year for the S&P 500 and Nasdaq 100. So this is the monthly chart. I know this is a bit long term, but I think it's important context to have in that we expect that this, which has been a really substantial cyclical up move, of course, largely driven by those mega caps, has given way to a DeMark signal. So you see the 13s there. Those are counter trend indications to suggest that perhaps the next 9 months or so will be a bit more of a churn at best. You see a corresponding downtick in the monthly MACD histogram to corroborate that, where we would have like a more decisive sell signal would be either if those DeMark signals are confirmed or you have a stochastic downturn. So those are things that we're watching out for, but we have enough deterioration on the shorter time frames, as you can imagine, to suggest that we're kind of on our way towards that. So if we look at the weekly, kind of zoomed in here, you see still the moving averages showed the cyclical uptrend, right? But within that context, there's been a meaningful loss of intermediate term momentum. Arguably, the weekly MACD really shows no signs of recovering, despite the fact that the S&P has been really pretty elevated, close to its highs. Pretty remarkable to see that behind the scenes in that way. And as you mentioned, Blake, I mean, the Mag 7, they've seen a pretty distinct loss of momentum and relative strength, and that's obviously been a part of the drag here. And if this is a Bloomberg index for the Mag 7, and you can see a brand new weekly MACD sell signal there as well. So
Hmm.
we've already been in a consolidation mode with an active DeMark sell signal, but this tells us that it's probably the start of something, not the end of something in terms of that sort of consolidation working off an overbought extreme. That tells us we probably need a bit more corrective action there. And this is what's happened with the relative performance now below the 50-day versus the S&P 500, supporting a deeper correction. And finally, we saw kind of Alphabet, and maybe to a lesser degree soon, we'll see it from Meta. They've joined that sort of underperformance, and I think that it's a potential drag. But then even the bottom up work isn't showing a lot of great charts, right? So even if we're going down to the small and mid cap level, even if we're going, individual stocks of the S&P 500, we're not seeing a lot of great, like sort of bullish technical catalysts. And I think that's a real message, right? In that if we don't
Yeah.
have any action items, I think we're generally better on the sidelines.
What's carrying this market higher? Katie. And by the way, I don't know if I've ever told you this. I know you're a big DeMark follower. When I first moved back home to Scottsdale, Arizona, this is about 12 years ago. Stupidly I rented an office from a hedge fund out here, and I used to get up at 2 in the morning to get to the office by 3 to start
Hi.
to do my broadcast, but it was in the same office complex as DeMark's
Oh, no
company.
way.
Yeah, so the daughter who runs the company, she's in her 50s, she's about my age, and we used to chat all the time. But yeah, so
And
I
I would imagine they start early too. I've never seen a work ethic like Tom DeMark's, frankly.
yeah, they do. They're Phoenix office, so they start at the 0 dark 30 hours. But anyway, that's neither here nor there. But what's carrying this market? What's really taking the baton, if you will.
Yeah, so the RRG that you see here, it gives you a little bit of a clue where it's coming from on the sector front. It's still like up until very recently was these mega cap heavy sectors, right? They've had the best trajectories here.
Yeah.
But you can see that how deeply oversold. This is kind of like where you've seen the underperformance down here, and you're getting upticks. Healthcare is the most pronounced here. So the rotations are starting to favor the more defensive and cyclical areas of the market, and that's to the detriment of the former market leadership. So that's more the sector story there. And honestly, the breadth. So we almost like have to make a distinction between breadth and leadership, right? I think it's often confused. So if we were to look at breadth, it's not been too terrible. And breadth means participation, right? So like how many stocks are up on up days, that type of thing. And until that really shows meaningful deterioration, we're still going to have like a decent tape, right? The leadership has definitively shifted, right? So think of leadership more as like the relative performance of those mega caps for one, and also stocks at new highs. So you've really seen that loss of leadership, but you really haven't gotten that meaningful loss of breadth. Our indicators would suggest we are going to get it though. This is the cumulative advanced decline line. So you
Mm.
can see breadth, again, it's fallen off a bit, but not too dramatically. But if you look at the impact on the indicators longer term, it is pretty meaningful to suggest that just like the major indices themselves, we probably have a bit of a corrective phase in breadth underway, right? So we're looking for this breadth metric to continue to trend lower. And with that, you're going to lose more and more support for the market. So breadth has been all right. It's been the leadership that's been a little bit of a hint. And you highlight the tariffs. I mean, now that's kind of known news, right? I thought the
Yeah.
DeepSeek reaction was really kind of interesting because it reminded us that what hits the market is often what's unknown, right? It's probably not the tariffs that's going to be the catalyst, right, for the next down leg. It could be something that we just don't know about yet. But regardless, I think the market could even just kind of fall of its own weight in a way here based on the indicators.
So, fall on its own weight. Is there any particular names that you're looking at that are just like, here's a couple of standouts that really are just not looking great. Is there anything out there that has your eye in that respect?
Yeah, I would say, certainly the likes of Microsoft or an NVIDIA. I think,
Yeah, right.
yeah, I mean, to take the obvious ones, I guess. I mean, Microsoft, like if we didn't know or care about what this stock was, I mean, this would look pretty toppy, I think, to most of us, right? This is almost
Sure.
like a head and shoulders-y feel to it. Indicators all point lower. Our cloud model, to me, is in jeopardy of breaking. Look at how it thins out here, but not to mention how it's gone from an uptrending cloud to more of a flat cloud. So we're seeing that really broadly where the cloud has flattened out and you're having these reactions to long-term overbought readings. And NVIDIA would be included in that we have here too. It just really looks toppy. So you have a DeMark sell on the monthly, an overbought downturn, and a declining MACD histogram there to suggest that at least this cyclical up move has given way to something a bit different, right? So we know that that's the case. Where we're like more interested and more excited are the relatively oversold areas of the market. So not to focus too much on the negative because there is always opportunity somewhere. We are more interested in the healthcare relief rally as something that folks can maybe leverage. We highlighted Regeneron here as a short-term long idea. And you can contrast that, of course, to, to any of the mega caps. See a
Sure.
cyclical down move with a 13 buy signal, so DeMark buy and an outside up week. So this is almost, it's kind of counterintuitive, but we're a little bit more interested in these counter trend types of setups in this environment because the relatively oversold names are less likely to get hit by, a C wave in this corrective phase.
So, I would be remiss. We've already had a question about it, so I do need to bug you a little bit about gold because gold has just been on fire. What do you think about gold here? And I mean, I can't argue a reason. I was just telling everybody, just a little earlier during our show, I can't argue I don't have a bearish argument for gold, and it scares the heck out of me
I
when I'm
know.
that way, but. How do you see gold right now?
Well, it's been the right way to be, right? We almost feel the same way. We're doubting ourselves, but frankly, the trend is still quite strong, and
Sure.
the monthly chart looks still very good. So it's not like it has that same characteristic as equities, where it has DeMark issues. This is the monthly gold chart. You can see the difference here. There you go. Look at the MACD, just looks better. Stochastics pointing up,
Yeah.
no DeMark sell. And so the last breakout, I'm trying to find my report here, got us to about 3060 on a measured move. So we highlight gold every week in our this weekly note, Fairlead Tactics here. And you can see the measured move price projection. Let me zoom in a little bit on this. So you see this breakout, and the measured move just is assuming the trajectory of the trend will maintain itself.
Yeah.
And so we think that's very viable, especially with the new MACD buy signal on the weekly chart. And at the same time, we think silver might actually outperform, which is kind of screwy. But I always think of silver as almost that high beta version of gold, in the same way, like you could look at Ether versus Bitcoin that way. And so we look for, or we're looking for silver to outperform based on the ratio. I just sent a tweet around on that.
Okay. Well, you think silver, and let me make sure I heard that correctly. You think silver is going to start to outperform gold from here on out?
Yeah, and
Okay.
I'm not saying necessarily longer term. It's almost a big trading range for the two. But
Yeah.
within that range, it looks like we'll see a pullback that favors silver. It's not to say gold won't still be forging higher, but silver is maybe the higher beta choice that has a little bit more near-term upside. So I think that would be interesting. And we actually highlighted Bitcoin in our morning note, or our forthcoming morning note. And it does, I still think of Bitcoin as a great sort of risk appetite metric. So a day like today, as an example, we have Bitcoin up 2.7% right now. I always think that probably means the equity market won't get too bad today. It
Yeah.
doesn't mean anything necessarily for tomorrow, but you can really sense the risk appetite in Bitcoin. So I think for even those that could care less about it as a trade or investment, to have it as a risk metric is kind of helpful.
And
And
I
yeah,
was going to ask you about Bitcoin anyway, just because it's like, to me, it's like the equity markets. It's consolidating near its highs. It does. I don't see any reason to be really on the short side of Bitcoin, other
no.
than, if you feel that stocks are going to roll over, then maybe you do short it as a risk proxy. But do you have it on any sell DeMark, 13, DeMark indicators there?
Yeah, so Bitcoin looks better, healthier, longer term than the S&P 500. Notice here too, here's the monthly. There's again no sell signals to highlight. So it is
Yeah.
differentiated positively longer term. But shorter term, it does seem to have some risk. I think these weekly stochastics are so helpful. You can see a negative divergence there, just a lower high, higher high. So that usually would give way to more corrective action. We're not recommending shorting Bitcoin. I think that's always dicey. But we have the first MACD sell signal. This is what I highlighted in the morning note. Since back here. So we have this new MACD sell this one gave way to a really prolonged corrective phase. So we feel we could be in store for a bit more of the same. Bitcoin has that propensity to stair step higher. So we're assuming this is just the stair, ultimately from which Bitcoin will lift. But I think it might take some time.
So, maybe best case scenario is we get to see 75 or 80,000 again, before and maybe some sort of corrective phase like we got last year, if you will.
Yeah, and that 75 level, this is right in here is like 74,000. That's
Yeah.
a great former resistance area that would make sense as support. It's not to say we have indications it's going there, but that's for sure a strong support level. In between here and there, there's a couple other things that we could focus on. The cloud is already sort of invalidated here, so we've already reversed the cloud, and then you can see these previous lows kick in here.
Well, Katie, I always appreciate your technical views, and one of the things that I love about what you do is you have a fund that is really, kind of focused more on technicals and taking advantage of the market from that point of view. Can you tell us about what you guys and gals do at Fairlead, and then also about your fund that you have?
For sure. So we are, I guess, officially like an independent research provider and now also a fund manager of the TAC ETF TACK. And so that came as sort of a byproduct of our client base and their demand and their sort of interest in sector rotation strategies. So what we're doing with the TAC ETF is essentially investing in the sector spiders as so it's a fund of funds. And we're doing so in an equal weight manner. So we're trying to reward the sectors that are smaller than technology with an oversized position, knowing that when technology is the primary source of upside leadership, that our client base is really interested in investing in stocks, individual stocks, cloud computing stocks, AI stocks, et cetera. So we figure TAC is sort of the great core equity holding, but we also are very risk averse, I'd say, both in our approach to technical analysis and also portfolio management. So we have an element to TAC where we're using asset allocation. We're rotating into short-term treasuries, long-term treasuries, and gold when we feel that the market's warranting it, right? So right now we have about a 1/8 position in those risk-off categories. And that helps us, balance out the risk when we have these kind of environments that seem a little bit more tenuous. So that's been great. The performance is really very solid and with very favorable risk metrics. Very low drawdown relative to the S&P 500, low correlation, low beta. So we're pretty proud of the fund, and we publish all sorts of research. As you know, Blake, we have about 9 research reports that we're publishing per week. So we're pretty prolific, and I'd say we generally focus mostly intermediate term. Our fund is long term in its orientation, but we'll focus mostly on that kind of like the next quarter or so in our research. And it's a great way to understand, I'd say, what the technical dynamics are, behind the markets in a consistent way. I always believe, like, we are best served by approaching markets somewhat systematically, to try to take out some of the emotion. And the charts really help you do that and get there faster in terms of that type of approach.
Well, Katie, I'm a big Katie Stockton fan, so thank you so much for spending your time this morning with us here on the Face Show. And if you guys and gals, enjoyed listening to Katie and you're listening to us on YouTube, make sure you give her a big thumbs up. Katie,
Thank you,
I
Blake.
want to wish you a great 2025, but I do want to catch up with you before at some point throughout the year. I'm just it was a nice surprise, even though Dale's out, that I got to spend some time with you today. So I
Yeah,
do want to
same
say
here,
thank.
Blake.
Yeah, yeah, it's really, really great. So, thank you so much, and I hope you have a wonderful day. And everybody else, have a great one. And Katie, we'll talk to you in the very near future.
Sounds good. Take care.
Thank you so much. All right, guys and gals, have a great day. Good luck, and make sure you guys are tuned in this whole week. It's going to be a busy week. We'll have Dale Pinker back with us. So you guys all have a great one. I will talk to you soon. And Jay, thanks for reaching out find me on ForexAnalytix.com. You can go through support and you can contact me through there. Thank you very much, everybody. Have a great one. Bye-bye. Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.